Hi, it's Graham Bibby here on the 7th of November 2016, a very important day, one day before the US election, which is due on the 8th. And I mentioned the US election because where the US stock market goes these days, so does most of the world's stock markets. So you have to look at diversification differently than maybe you used to in the old days, when you thought, let's have some US stocks, let's have some European, Asia, maybe even Latin America, bonds, whatever, because the markets are more correlated than ever. So for me, buy and hold doesn't cut it anymore. So let's just get right into it. I don't really want to focus on that today. Just want to show you where the markets are going. And here is the S&P 500, which topped out in August. Came down to support here in September, which was good, which is okay. Then tried to rally, but we've had these lower tops, and then we've been breaking down as we got nearer to the election. Now that might be selling before the news, and we don't really know tomorrow what's going to happen. Whether Trump gets in, it's going to be a sell-off, as some people say, or if Clinton gets in, we're going to get a rally. So we just got to follow the trends, we've got to follow a system, we've got to follow a methodology. So S&P not looking great. Dow Jones not looking so bad, but not great. We broke out here in July to new highs, and that should have signaled we're off. You know, all this volatility which has been going on for so long. This is not the global financial crisis. This is August 2015, when the market fell from about 18,250 to 15,750. That's a significant move. And really, since the end of 2014, quite strong volatility in the market. It's very difficult, especially when you're following trends. But these trendless periods are normally followed by strong trending periods. So this is the Nasdaq, which has been breaking down even more, which is why in our Insiders Club we've got a lot of cash. In our ETF service today, we'll be selling our last two holdings. We'll be 100% cash. So this is all about playing in the game, but playing defensive. And you shouldn't have all your money in the stock market. There are places you can put deposits where you're not getting zero return, where you get fixed returns of 8 or 9%. There are private placements you can make where it doesn't matter if 9 of your 10 placements fall over, because the one that makes it can double or treble your overall money. And then there are undervalued property and land deals that you can get into, where you know you've made money the day you buy because you're adding value, or you've bought 30% undervalue in an area where there's demand. But anyway, so this, the Nasdaq, let's get back to the markets. The Nasdaq looks a bit negative. In Australia, where I have a lot of Insider Club members, the same thing, been selling off here. Market down quite a bit since its August high, and you know, there's a volatility of the overall year, very, very difficult. Interestingly enough, commodity index, which was looking stronger just over a week ago, has been pulling back. But when I look at gold and silver, which had sold off strongly at the end of September, there's signs of an uptrend. Hence, in our special situation service and our mirroring service, there's a buy signal for a 10% position in a junior gold mining ETF, which, you know, we've bought. It's come back a bit since we bought, a little bit, but still looks quite interesting on the chart. That's this one here. So we're buying in low, because this low is higher than this one. This high is higher than this one, and we just moved into it now. But we've only got 10% because I'm very, very cautious. But the buy level's around 13, and this was 35 just in August. That's how crazy the markets have been. So let's see what happens after the election. But you've always got to be cautious. You've always got to have an exit route. The secret of the top managers that I've seen in the world is a bit like property. Well, property is say location, 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 not just location. It's make the money the day you buy, make the money the day you buy, make the money the day you buy. And here, certainly, the trend is your friend. And all the top managers in the world, the one ingredient they had was cut your losses, cut your losses, cut your losses. That means if a trend's against you, it's not doing what you thought it would do, get out quickly and cut how much you can lose. It doesn't mean you don't lose, but just cut it. Don't just hold on going from 35 to 10 because you're 65% down. So Graham Bibby on the 7th of November. Just wanted to get this short blast out to you. I've taken 5 minutes something. Very soon you'll be seeing new format for videoing to you, which I hope you'll like. And I'm still going to tell you very soon about how you can get involved in undervalued property and land, where we know that the numbers that we stack up, or where we've bought, we know we've made money the day we buy, so we don't have to rely on the market moving. So Graham Bibby, 7th of November 2016. So I'm wishing you a great week ahead, and best of luck for everyone with the election coming up. Bye bye.